8 months. And if you look at the core, that was the lowest since March of 2021. So we've gotten in the payrolls number, we got in the inflation number. Now what? Okay, that's why we bring in the pros, and that's why we have Rebecca Walser here today, president of Walser Wealth Management. So glad you're here.
So glad to be here. You are my cold.
And so Rebecca's here, always as usual, looking at what we should be thinking, because you're watching this market day in and day out. What are your thoughts these days?
Well, I mean, obviously it's the opposite of what we used to have, Nicole, which is good news or bad news is good news. This is the opposite. This is bad news is not necessarily good news for the market, because this means the Fed has less reason to be more accommodative. We know that Powell was out in May. We've got Walser coming in. A lot of people think that he's a really surprising pick because he was hawkish, but now maybe he'll be more accommodative under what Trump really wants him to do. But when you've got inflation ticking down like this, Nicole, why would we cut rates into that? When you have jobs that are coming out unexpectedly high, and a labor unemployment rate ticking down to 4.3%, why would we cut into that? So I think the market after it is still looking up positive, but very almost flat. A Dow and S&P almost flat expected as it opens.
I was looking at what Citi wrote yesterday. Citi Group or Corp, whatever, was looking at the slower jobs market, but didn't think a cut comes in the first half of the year, but did say 3 cuts in the back half of the year. What do you think of something like that?
I mean, and so I would be looking at their underlying analytics and saying, what is the impetus for 3 cuts in the back half of the year?
Right.
It's just kind of interesting, because when we did our forecast for the beginning of the year, January 2nd, we said we really saw the market pulling back 5 to 10% in Q1 and volatility in Q2, but we might start to see positive momentum in 3 and 4. But we know that the market and what equities are doing is not necessarily always connected to what the Fed is doing. So it's interesting. I would have to really look at their analytics and see what is causing them to say that we're going to need cuts in the back half of the year. That kind of scares me. Like, what's the alarming fact that's coming? For right now, I think that this market is just trying to figure out what's going on. I definitely think that we oversold out of software. I think that was a hyper emotional decision, and there are some buys on that side that I think investors should really look at, because I do think that AI ultimately is a threat to software. However, is it the threat that we need to dump the software tomorrow? No, it's not. It's not at that point.
It was interesting how AI sort of made its way through. First, it was software, then it was some of the financials and insurance.
Yep.
And I was hearing today a little bit about, yesterday, some of the transportation stocks and logistics of transport. So I guess AI is going to make its way through every single sector.
Sure.
Maybe it could push it up or cause it to be somewhat recessionary, but certainly some volatility.
Yeah.
Do you like tech overall? I mean, when tech's pulling back, do you buy?
I mean, it depends. I mean, I can't say blanketly we buy. We look at the fundamentals, we look at the technicals, and we see if there's an opportunity. I think for sure, like, for example, Intuit has definitely been oversold. They're 50% off their all-time high. They've got a lot of things that are going on. They do have a strategic partnership with OpenAI to really bring their software into the AI world and the AI space. So I feel like if you've got a software company that is definitely making headways, not just a partnership, but is really doing things, Nicole, to bring their software into the AI world, then they can maybe be a player. It's much like Visa on the financial services side is really becoming a player in the blockchain space. They know that that's the future, and they're saying, hey, we don't want to fight the future. Let's be a part of it. I think any financial sector that is not doing that is going to get left behind. AI it's creative destruction. That's what capitalism is. It's going to fundamentally change how we do business today into the new way, and there will be some losers in that, but we have to make sure that we don't just whole cloth say, oh, software is dead. So really, where's the AI tool that's going to do for instance, Intuit. We've got Credit Karma.
Yeah, now
we've got
when you talk about Intuit, I want folks to know this was a name that you had, you got out, and you're getting back in.
Yeah, it's a buy.
Is that right?
Now. It's been oversold. It's 50% off its all-time high. It's still got incredible revenue growth, 17% revenue growth. It's got 40% both profit and EPS growth. So this is a company that is doing extremely well, and it's at a discount now at 50% off its all-time high.
You see the chart. I mean, it went from
Exactly.
It's at 400 now.
Exactly.
And you see it, as you noted, 50% off. What about some of the other areas? I mean, people were talking about tech software and hardware, maybe you have to be more patient, but that maybe the way to play tech is energy and infrastructure.
I love it.
What do you think about that concept?
I love Duke Energy. It's also something that has got, it has one of the most CapEx spending projections based on data centers and the megawatts of creating data centers to be able to handle all of the, we can't cash these AI checks that we're writing without energy. So energy is going to be a great long-term play. And somebody like a Duke Energy that has such a robust CapEx plan to really be able to fund the data centers with actual energy is something that is a great long-term play.
Okay, I don't want to get too into the weeds, but I know because you and I have had extended conversations on panels, the dollar and gold. Can you give us a thought on each, please?
Yeah. So, it's interesting. Gold went parabolic. I've been a gold bug, silver bug since 2020, since we started printing money infinitum. So I knew that we would get speculators to come into the game at some point, and that's what happened. When you go from 47 to 49 to 5,300, 5,400, and you're going to come right back down. There was no support established at all, Nicole. So that does not mean to tell people you missed the gold. I've had people all the time say, is it too late to buy gold? Listen, there's analysis that's been done that says if we really price gold for what the inflation is of the currency that we've created, it should be somewhere around $20,000 a troy ounce.
So you think gold is heading way higher?
It is.
But you had a concern that where were the gold bars? How are we going to? Where is the gold exactly?
Yeah,
you had some questions.
And that's more of a concern. If we have a scarcity supply that we aren't even aware of, that will just make it more valuable, which means it will go up even more.
What about something like Bitcoin? I mean, that Bitcoin went to 60,000 from 127,000. What do folks ask you, and what do you tell them?
So Bitcoin is something I always say is still speculative. We don't have a proof of concept through a true recession to see how it will perform. Is it going to be risk on or is it going to be risk off? Is it digital gold or is it not? When we look at Bitcoin, what we look at is the 2 and 10-year yield curves, and we look at 2-year forward moving. And what we see with Bitcoin, unfortunately, is that we think it still could come down even further all the way through mid-2027, somewhere in the 50, 49, 55 range. It could, based on what's going on right now. But that does not mean that Bitcoin is not a long-term play. It is the grandfather of the blockchain, and the blockchain is the future of currency. That is where currency is moving. So just because things are choppy, this is just, I don't want to make a comparison, but I'm going to have to. The .com monetization was ugly, Nicole, but if you got out and missed the boat because it was ugly, then you didn't have the recovery of it taking off and technology and the internet really being a thing. So we don't want to make that mistake. This is monetization of AI. This is monetization of the blockchain. It's going to be choppy, but you've got to stay in it for the long term.
And then quickly, I mean, when we see 7,000 on the S&P, I mean, let's say we're at 7,000-ish. Where are we at the end of the year? Higher or lower? I mean, what do you expect?
We overall expect the market to do a positive year, but not the 20% that we've been seeing. And we had a great run, 23, 24, 25. We don't expect it to be that. We do expect more volatility. I think the back end of the year we'll actually probably start to see some momentum. Maybe somewhere in the 5 to 10% range is what I'm kind of expecting for the year.
It's great to see you. Rebecca Walser, thank you so much. Always wonderful to have you here on the show in person.